Yeah, baby. Back to work tonight. What a great day. Another great day comes to an end. It's Wednesday evening, though. Time to get ready for Thursday's trading session. Not just any Thursday. We got Reaction Thursday, GDP Thursday coming right around the corner. Got some big moves on the charts today. That means some big opportunities for Thirsty Thursday's trading session. You know me. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. And as always, before we jump in and get this video going tonight, make sure you subscribe so you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, you know what to do, right? Hit that like button for me. Appreciate you guys supporting this YouTube channel and tuning in tonight. But let's get ready for Thursday. Thursday, as I told you guys last night, Thursday could be one of the best days of the week we get here, this final week of the month of July. Boy, big moves on the charts here today. We saw that short squeeze that we talked about in last night's video. Strong move up here. Not as strong on the oil, but everything you can see here right now is bullish. We have some very important clues in the size and the strength of that move on the Nasdaq and the S&P. There are ultimately two really common setups after we see moves of these magnitudes. So we're going to talk about those two kind of my favorite ways to trade after a big run like this. So we'll cover that in detail here tonight. I can definitely see some pullbacks. I can certainly see some reversal opportunities for tomorrow. So we're going to cover both sides of the market because I definitely do think you can trade both sides, both the Nasdaq and the S&P. Oil is definitely bullish as well. Oil is the kind of the mixed bag of the bunch tonight. I can definitely see some pullbacks setups on oil right now, some breakout setups back to 100 on oil, and of course with some major resistance here overhead, possibly some double top reversals as well. So not to worry, I'm going to break it down into an easy formula to follow tomorrow so you can make some money with this stuff. But speaking of tomorrow though, let's make sure we all get on the same page here real quickly. Tomorrow is, again, another big day here in the markets. Now remember, we're going into the end of the month right now, which usually means volatility will increase. Combine that with the post FOMC announcement tomorrow and what could be a very interesting GDP number tomorrow morning. We do expect volatility to increase always as we go into the end of the week and the end of the month. So volatility should be kicking up here in the next 2 days. Really, the biggest things tomorrow is we have that GDP number. Remember, everyone's watching this GDP number because if we see a negative GDP back-to-back quarters signals the word that nobody wants to talk about right now, right? Recession is the word, right, with it. So that is possibly a recession-triggering GDP number tomorrow. I doubt jobless claims will be the big thing. People are watching. That GDP number is definitely going to be a big catalyst for us tomorrow. So definitely don't hit that snooze button too much tomorrow morning. Get there early and you'll get a front row seat for that GDP number tomorrow. We also, of course, are going into the last kind of hurrah of earnings season right now. Tomorrow morning, we don't have a lot to worry about tomorrow morning. There's not a lot on the schedule tomorrow before the open, but I bring this up because tomorrow afternoon, we've got just a couple names that you might recognize. Apple, Intel, Roku, right? Amazon. Those are some big tech names, right? Coming in tomorrow afternoon. Why would that be important? Well, imagine you're trading the Nasdaq tomorrow. As we get later in the afternoon tomorrow on the Nasdaq, I would definitely expect things to probably soften out and even out. Also, too, on oil, too. Oil has a lot of big energy names reporting on Friday morning. So I would imagine, Nasdaq and the oil markets might be a little bit touch and go late in the day tomorrow. So, if the price action is thin, if the price action is quieting down, 3:30, 4 o'clock. Remember, trading is like riding a bicycle. It's always easier when it's moving. So, and if you don't know what good price action looks like, come out and join me in the trade room, and I'll show you what good versus bad price action looks like so you know which ones to focus on. So we get some earnings tomorrow morning, but really the earnings tomorrow afternoon is probably the more important stuff to be thinking about. That GDP number tomorrow is the big headline number. And again, as I mentioned in last night's video, the markets now, after we know we got the 75 basis point rate hike, but more importantly, Jerome Powell in his press conference today made a very good point that they may be easing off the gas pedal when it comes to raising these rates in the future. We're basically back to neutral, as he called it today. And he basically said, we will keep raising rates aggressively, but he kind of hinted at the fact they may not need to go into September and, of course, into the end of the year. That may be the biggest kind of boom for these markets, and maybe one of the most important kind of hidden clues as we go into tomorrow. So back to our charts though right now. The money is in the charts, right? The charts are where we get all the best trade ideas. That's where the money is made, right? Not in the news counter. The news is noise. Now, I'm going to cover all my favorite trades in tonight's video. Whether you trade one of these markets or you trade all of these markets like we do in our trade room, make sure you watch all the way to the end, because I'll provide different trade ideas, different advanced setups as we go deeper into this video. And I do try to save the best stuff for last, so make sure you stick around all the way to the end. Let's go NASDAQ first. We'll go NASDAQ, Emini, and we'll wrap up on the black gold, the Texas tea, the crude oil to finish up the video here for tonight. Over on the NASDAQ, or the micro NASDAQ, a lot of my students right now are just making a killing on the micro NASDAQs. Anyways, QQQs, NASDAQ, micro NASDAQ, there are really three kind of key insights that lead us in the right direction for where the money-making trades are going to be for tomorrow. First one is a strong move higher, right? Strong move. Anytime we see a strong move in one direction, what do we always say? We expect a deep pullback and a retest of that high. Now, once we retest the high, then the question is, do we see a double top reversal? One of my favorites. Do we see a breakout through those highs, right, to levels up above, right, possibly all the way up to that 12,857 level? That's kind of the next big area of resistance as we go higher. But that's one very big clue here on the NASDAQ. It's a strong move higher. We expect a retest at some point tomorrow. And then from there, do we fail back down, or do we blast up and go higher? The next clue is similar to that. It's a big move higher today. Now, what's the difference? Well, remember, we see a lot of strong moves, but we don't oftentimes see a huge move like we saw today. Today was a very big move here on the NASDAQ. And for the most part, there really weren't that many deep pullbacks that would allow buyers to kind of buy the dip or buy at a good value. And so we know that anytime we have a big move in one session, we know the following day there are going to be bargain hunters out there who are going to resist, they're going to reject the idea of buying way up here, and they're looking for that deeper pullback to get in something a little bit more reasonable, right? So we know we already have that strong move, so we know we're anticipating a retest. That big move today says, don't be surprised if we see what looks like a reversal. In fact, I always tell my students when they ask me, okay, so how deep is a deep pullback? How do you know when the pullback is deep enough? And my answer is always the same. Right when that little voice in your head says, oh my goodness, maybe it's a reversal. Once you start questioning it, bingo, that's usually when you're ready to start buying. So how deep of the pullback do we think we're going to get? Well, here's another clue. A range and rotation off the high. You'll notice, right, we popped up into a range, we popped up into a small range, now we're popping up. Remember we talked about this last night on the video. The same reason why I could have expected this short squeeze today is the same reason why now we have potentially the amount above the range, the amount below the range, and possibly a slingshot back to take out some of these areas here. The trading range, but more importantly, rotation off the high as the market goes sideways for a bit, kicks up, and then potentially makes a symmetrical move back down again. That really gives us a lot of clarity as far as just how deep a deep pullback may very well be here for us on the NQ. So how do we make some money with this information? Knowing what happened or getting these clues is one thing, but how do we make money on this? Well, what you want to think about when it comes to a really big move like this is the 2-try rule is your best friend. So we already know right now, for what we know right now, we're looking for a pullback, looking to be a buyer, going back up to retest the high. There are two ways to use the 2-try rule in this situation. One would be a shallow pullback, right? So again, we're trying to get a deeper pullback down here to really rope in some of these bears, right? And give us a nice big reward for a small amount of risk. So we know we're looking for that deep pullback. In the meantime, though, if I can get the bears coming out and trying to sell this, again, we're going to use the 2-try rule on a shallow pullback. I know this isn't very shallow overall, but in this condition right now, this is a relatively shallow pullback. If I can get a relatively shallow pullback, this is where I'll look for those bears trying once, bears trying twice. This is that 2-try rule I was just talking about, and a trap. Now, why a trap? Traps are going to be your favorite setup. Promise me. I promise you they will be. Traps are great whenever you're worried about, in this case, buying too high, or if you're worried about selling too low. That trap will be the best way to buy this, again, anticipating this retest of that high. That would be a very effective way to buy this thing. Now, what if we get that deeper pullback? The deeper pullback is what we want. And again, how deep, right? How deep? Again, usually it's right about when you start going, oh my goodness, maybe this is a reversal. That's usually when it's deep enough. Now, deep pullbacks, we don't have to worry about buying high anymore, but now we have obviously quite a bit of momentum now coming in for the bears here. They're going to feel like this is a reversal, and they're going to throw the kitchen sink at it. We want to use that 2-try rule again. Now, in this situation, we don't exactly need a trap because we're not worried about buying way up near what would be what we call mission accomplished or the buyer's objective. What we do need to do, though, is we need to get those bears trying a couple times, and then again, think about if I was a seller here. Remember, the easiest money you're ever going to make when you're trying to buy a pullback is if you can buy when the sellers are caught in a losing position. Because if you're short and you get stopped out, what happens? You have nowhere to hide. You get to buy your way out. So in this area right here, buyers are buying off the low pullback and sellers are buying by default by getting out of their short position. A stop run would be a fantastic way to give yourself a nice edge, right, over those bears to run this thing back up. So I'm looking for a nice juicy signal candle for what I call a 2-try failure pattern. Now, a trap would be great. Don't get me wrong. A trap would be fantastic, but it's not required at this point. Now, your job is just getting fun here now. Now, as we go higher, where does the market want to go? It wants to go back up and retest the high. So now as that rotation or as momentum begins to turn, now everybody picks up on the fact that, oh my goodness, it's not a reversal. And now we can go out, we can mark off that high, find a channel off of that low. And if you guys watch my videos or if you're a student of mine, you know my favorite entry is that first test off the low of that new channel. Now you'll notice how I draw this. I draw this using a prior swing because traps are always some of my favorites. But you know, as we talk about in our free trading course, I don't care. It could be a trap, it could be a failure, it could be a pullback combination. And guys, I know that most of you all who are watching this video right now, I know that most of you have taken the free trading classes on our website. You've learned, right? You've learned about those 2-try failures. You've learned about how to find those traps or failure or pullback entries off of that low. But listen, if you're here for the first time, if you haven't taken the free courses on our website and learned all the entry tactics, what I'll do is I'll put a link up here for you in the upper right hand corner. If you're like me and you hate missing the big winners, or you're taking too many losses, or maybe you're trying to transition from part-time trading into full-time trading, the roadmap that I teach inside that free trading class, the strategy I teach in that, right, will get you on the right track. You'll know where the best trades are going to live each day, and you'll have the tools you need to start trading them on your own, right? Great way to transition from part-time trading to full-time trading. Grab that link in the upper right-hand corner. I have hundreds of examples in our free course about those 2-try failures into those first test is the best test as we're going higher. I love that. I love that. Now, question for you. As we pull back, how does this market now turn bearish? At what point do we know the market now becomes a reversal? I'm going to touch on that a little bit later on in this video, so you better stay with me, right, as we go deeper into this lesson tonight. Next question is, what if we get that trap, right, that trap, and it blasts and run higher? how would I trade the breakout going higher? And also, too, how would I sell off of that high? Well, let's talk about the breakout first. Now, if we can get through this area up here, there's a big range overhead, and we should have a pretty easy job from there going up into that next area at 12,857, 12,917, potentially really all the way up to 13,000. The bulls really have that 13,000 number on a bigger scale. That's where they're hunting for over the next few days, maybe the next few weeks here, depending how long it takes here. For now, though, how do we buy this thing as it goes higher? There are really three different types of breakout patterns I'm looking for right now. One of them is a 1-2-3 breakout. Let's say, for example, we get back up to retest the high. Mission accomplished. But now the buyers come in and they say, no, we're not done yet. Did you hear Powell yesterday? Remember how he said, we're not going to raise rates as much? Yeah, we heard that. Maybe the buyers come in, and this is where those buyers may come in and really jump off that moving average. Okay, we call these 1, 2, 3 breakout patterns. Okay, they're very, very simple and very reliable. We're going to draw a trend line off those higher highs. We're going to draw that channel off that major low. Again, I like to drill down, find my prior swings. This is, of course, is a 4,000 tick chart here. On the NASDAQ, we are not going to trade off a 4,000 tick chart. We'll use a faster time frame. You'll learn that stuff inside that free course that I mentioned earlier. Now, as we pull back now, this is where we grab our traps below prior swings, the failures below the moving average, the pullback combinations. Now, where do we think the market wants to go on this? We talked about those levels overhead, but they were this way: first leg and third leg. Okay, first leg, third leg, first leg, third leg. Easy way to fine tune where that exit will be after you grab that first test off the low of that channel. Trap, failure, pullback combo. That's one of 3 different breakout patterns I can use. Here's another one I can use going higher. Let's say, for example, we retest the high. But now, instead of the pullback and the blast, now the market barely pulls back, right? Now it grinds and grinds and grinds. These grinders are really, really simple, because now, once you see that grind, it's simple. Draw a nice tight trend line off those highs, anchor it down at a major swing. That will give you this little hidden channel, and then we can go out, swing, right? Look for those prior swings and grab that first test. Now, if you don't have any prior swings to work with, just make sure you get underneath this 21 EMA. Let those bears come in and try to sell short. Once they do, you got them right where you want them, and you can use their stop losses as fuel, because after all, anytime we see a strong move in one direction, we expect a retest of that high. Again, first leg, third leg, that will give you some options there as well. All right, that's 2 out of the 3 breakouts we can use as we're going higher. I'll cover one more of them on the S&P as we go deeper into this video. So on the NASDAQ now, we kind of know how to buy this, right? We know how to buy the deeper pullback. Now, how do we sell it? How do we sell the reversal? How do we sell the double top reversal? Let's talk more about that now over on the Emini S&P. The S&P and the NASDAQ are very, very similar, so pretty much everything I say right now on the NASDAQ can be applied to the S&P and vice versa. So we got 3 of pretty much the same exact clues here on the S&P 500. Makes my job relatively easy. We have a strong move. Anytime we see a strong move, we expect a pullback and a retest. Once we get that retest, do we blast through with one of those breakout patterns I talked about a moment ago, or do we hold that high for a reversal off of that high, which I would love to see tomorrow? I don't care what direction I trade, right? Neither should you. Okay, if we're bullish, we'll buy. If we get a reversal, we'll sell. We trade what the chart tells us. So that's one clue. The next clue is the size of that move. It's a huge move. Big move today. Very few pullbacks. We have to assume that buyers are going to look at this and say, you know what? I'm bullish, but you got to give me a better price, right? Give me a better price. Give me something a little bit lower down here that I can kind of sink my teeth into here as well. And then the third clue, we don't have the range to work with on the S&P. On the NASDAQ, we had that nice juicy range with that pendulum swing off the high. On the S&P right now, we have something almost just as good, and that is a spike and channel, right? Spike and channel, we go spike up, and there's this little tiny channel right there. See that? Now, why is a spike and channel important? Well, because spike and channels pretty much tell you where all the buyers are waiting. Okay, the way spike and channels work is the base of that channel, okay, basically where the channel hits the spike. So right there, right, that's one level, and the first pullback, that's the other one. That creates the battle zone, as I call it, right? The battle zone is basically where buyers and sellers will battle over control. As I mentioned before, the easiest money you're ever going to make is when you've got, in this case, the sellers trapped in, right, and they're getting pinched for a stop run. That's a great spot to be a buyer there. So that's definitely to give us an area where we know where, right, this area right here, we know that more buyers are going to be waiting. So we can put all this information together now, and we can pretty much formulate a very similar game plan that we talked about on the NASDAQ, right? That shallow pullback. I won't repeat myself too much. That shallow pullback trap, right? That deep pullback, run those stops, and then grab that first test, right? This is the same stuff we just talked about on the NASDAQ. I'm not going to bore you guys by repeating that same thing over and over again. And at the same time here, right, if we do punch, it's that pop and that grind, right? Pop and grind channel. It's that 1, 2, 3 breakout. Okay, so we talked about all that stuff, right, on the NASDAQ. Where would the buyers want to go? We have some really nice juicy levels overhead here. 4074, 4086, right, on the way up to that 4100, next big round number. That's where the buyers want to go, right? They want to take out some of those big tops up there from, it's pretty far back. Those are levels we're looking for here for the buyers. Now, short side, how do we sell this sucker, right? How do we sell this thing? Now, let's say we pull back. Right, the bears come in, they get trapped, right? They're getting short. They're thinking this thing is a reversal. We run this sucker right back up to retest the high. Now, once we go back and retest that high now it's what we call mission accomplished. Okay, mission accomplished. At this point now, they have to break out with a breakout pattern, or we have to look for signs of exhaustion. Now, we've talked about this quite a bit throughout these videos over the last few weeks. There are basically three rules for a reversal. You recall what they were? One was a major turning point, okay, which would be that high. Second one is signs of exhaustion, okay, which we're going to use the 2-try rule for. And third rule is you have to have some sort of catalyst, right? Some sort of catalyst, something that will give you some sort of edge over the other side of the market. These are the three rules that I use every day in our trade room whenever I'm looking for a reversal. Again, going against the momentum of the market and trying to sell off these highs, that will be a reversal. So how do we apply those three rules? Well, again, if we go back and retest this high, we are at a major turning point. Now we get to see signs of exhaustion. Okay, again, this is where that 2-try rule comes in really good handy now. Let those buyers try once. Let them try twice. Now, notice how I draw this guy. This is very, very important. When you're trying to pick a top like this, you want to remember this very simple rule. Buyers want to buy low and sellers want to sell high. Why do I say that? Well, because when it comes to using the 2-try rule, the buyers need lower lows on that, right, on that 2-try. Make sense? Okay, just like if we went lower, the bears need ideally higher highs. Sellers want to sell high. That's how I know the bears are committed in there, right? As we go back up and we retest that high now, moving average comes over, the buyers now try once, taking it higher. The buyers try twice now. Now we have to assume these are the weak hands, right? These are the rookies. These are not experienced traders, because the professionals, the smart money, they're buying down here, right? The smart money's taking their profit up here. Okay, you don't want to be getting in an area where the buyers should be taking profit. So we have to assume this is the weak hands, right? This is the dumb money at the poker table, right? The brand new player of the game with a pocket full of chips. Where are their stops going to be? Okay, think like a buyer right now. Their stops are right below that low. So again, we've got a major turning point. where you have signs of exhaustion, and then I can't think of a better catalyst. I can't think of a better catalyst than selling off the high when buyers are trapped. And we know at this point, the smart money is probably not going to want more of this until down here, right? The smart money wants to buy low. So we have all this kind of wide open space right there to work with. This is one of my favorite type of reversals, these kind of double top reversals. Now, once I get those stops run and we get that nice, right, that nice signal coming down off that high. Now, as the market rolls over, where do we go now? Where does the market want to go? A market wants to go basically fill more orders, right? It wants to get back down to that low right there. So my job at this point now is to find a new trend line, mark a new channel, look left, and then find that first test off of that high. Profit comes off at that low. And in these situations, because of that big move, you would definitely want to leave a runner if you can. Then some of these bigger levels down here, around that 39.80, 39.75, that trading range. Okay? So trying to sell that double top, again, by nature, we want to see a double top, or at least a retest that high. We want to see buyers dig their own grave. Let them dig that grave. Once they've got that hole dug for themselves, 1, 2, hit them right into those stops. And then as we collapse back down, don't chase it because we sell high. Remember, we don't sell low. We sell high. We mark a new trend line. We find that channel and we go out. Again, I love traps, right? I love traps. But I'll take whatever we get, right? Trap pattern, failure above the moving average, right? Pullback combo. And again, you'll see a lot of examples of these about how we apply these setups on our favorite markets in that free trading course that I mentioned earlier, right? So that's a great setup there. And then again, the target is back down to retest that level, right? I have to get these entries before we get back to that low. Okay. Now, imagine now for a second, right? Imagine now we get that double top, right? They reverse it back down, and now we find ourselves down here now. Okay. Now, what do we do now? Now it's a bull market into a trading range. What do you do with a bull market trading range? You look for levels of support, like like trend lines. And then as we come off that low now, what do? We go out, we rope in those bears again. 1, 2, because again, we're not worried about buying too high at that point. We know that ranges act like magnets. And so if we get that short off the high, we take out that kind of, medium term low, then remember, weekends, okay? Professionals are not selling down there. This is the short money, right? This is the weekends. The dumb money comes in now. Once they try twice, bam, right? Buy right back up into that range. Okay, this is why I said earlier, we can play both sides of this market tomorrow. Buy the dip, sell the reversal, buy the trap in fail, right? Buy into those failures as we go. Okay, this gets me excited just talking about it right now. I love setups like these, right? It's fun when you know how to use those catalysts, right? Like running stops here. Now, how do we short this thing? At some point going lower here, right, it's going to be, well, again, we're expecting a deep pullback and a move back up here. At what point does this thing turn into a reversal? The most common scenario about a reversal in a market that moves this big, right, this strong in one direction, a very common way that it happens is to have a pop down. And then while the bears now are coming in and trying to load the boat, it starts to grind down. This is a very, very common kind of V-top. You know what I mean? We jump up, we can't hold. Again, we're coming out of an FOMC announcement. We have GDP tomorrow morning. There is no telling what this market is capable of, especially here overnight, right? I do my best to plan my trades ahead of time. That way I have a game plan to rely on the following day with all of our students in our trade room. So imagine now we get that nice deep pullback now. But now instead of the bears coming in, trying twice and failing now, right? Now we simply pull back and we begin to grind down off of that low. Again, this is a very easy giveaway. Once it starts to grind, that grind is the giveaway. The grind tells you Just like here, where they pop and they grind up like that, right? The grind tells you the other side of the market, in this case the buyers, have walked away from this. Now remember, you can apply the same technique to the NASDAQ as well. I'm just simply showing it on the S&P. I'm going to mark off that trend line off that low. I'm going to bring it up around these bigger highs. We're going to look left. We're going to find those prior swings and look for that first test off the high of that channel. Now, again, I am simplifying this right now with simply, a trap. But again, this could be any of those entry patterns, the traps, the failures, especially the pullback combinations, right off the high of that channel. Where do we think the market wants to go at that point? I would guess that prior week close. I would guess that 39.63 and a quarter. Tomorrow's a Thursday, so Thursday and Friday. Basically, once we get over the hump of Hump Day on Wednesday, the prior week's closing prices become very good psychological targets for the following day. So Thursdays and Fridays. Anytime I see a situation like this where the market is supposed to reverse like this, right, we know that prior week close is going to be a good one. Now, here's another one too. Let's say, for example, now we pull back, right, and then we fail to retest the high. Okay, we fail to retest the high, and we start to run lower. This is also something we want to keep an eye out for, right? We know we're trying to retest the high. So if they fail to retest that high now, these are often times where the market will then, as it kind of rolls over, right, it'll get below the moving average, it'll pull back, it'll jump and run lower. Okay, see what I'm saying here? Right, the buyers buy it up, they fail to retest the high. This produces that falling resistance, which makes it very difficult for buyers now to get a good, clean signal going back up to retest the high. So watch and see, and again, I'm kind of painting different pictures here for us right now. If they fail to retest that high and then back below that moving average and jump, remember they have to absolutely jump off of that moving average. If they can jump off that moving average, now as the market pushes lower, this is a reversal, and we now look for that trend line off that low, that hidden channel off of that high. We find those prior swings, and we grab that first test. Okay, pretty easy idea there. And again, at that point now, we know we have that trading range, right, acting accordingly. Okay, in this particular situation, that first leg off the high, that's your first leg. This will be your second leg right there. That'll be your third leg right there. Okay, so again, if you want to kind of refine your exits on this, the size of that pullback now, and again, I don't know exactly what it will be for tomorrow, the size of that pullback now, though, that will oftentimes be the size of that target down here as we go lower. All right? Or let's say the market drops lower. We pull back to the moving average, and the bears come in and they blast off the EMA. That's a reversal too, right? Again, anytime right now, the buyers are jumping off the moving average, right? If we get back below this, right? If we get back into this area here, and we're expecting now the buyers to come in and take this thing over again, but the bears come in and they just crush it off of the moving average, that's a reversal. That's a 1, 2, 3 reversal pattern. Okay, mark off that low, mark off that high, and you got it. Sell that first test off of that high. And again, I'm simplifying it right now, right? The same entries that we use in that free trading class. Traps are great. Look for buyer failures as we go above that moving average. All right, guys? So now we know kind of as it goes lower, if it starts to kick and make the move lower. But again, as it goes lower here, be aware of that deep pullback right when it starts feeling like it's a reversal. Unless those bears have pulled back and jumped off that moving average, we really have to be careful being fooled into trying to be a seller down here until we see it pull back and really punch, right, at this point. Now, as we go higher, watch that retest, watch for that 2-try failure off the high, or again, watch for those breakouts as we go higher here as well. Should be a pretty active day tomorrow in the trade room on the S&P and, of course, the NASDAQ. Let's keep going here. Wrapping things up here now over on the crude oil. We got a good game plan of attack for the E-minis. Oil is probably the muddiest of the markets here tonight. Kind of a bit indecisive, and I think you'll see why here in a moment. Not as clear as the E-minis. That's okay though. We also know too we got those big earnings coming in on Friday morning too. So this market definitely has potential to get a bit squirrely over the next 24 to 48 hours. So be aware of that as we go into Friday's big earnings kind of a breakout there on Friday morning. Now, 3 key insights here right now. First one is a bullish range with maybe a breakout. Okay, so get the market going bullish, right? Big move up into a trading range. You'll notice right now we are breaking above the high of that trading range. Now, at this point, they may keep going higher, right? For all I know, that this is a breakout. But right now, we don't have enough information. What I do have enough information is that we know that as the market pulls back below that trading range, now all the buyers are waiting underneath these prior levels to buy it back up. Or let's face it, this may end up continuing and slingshotting all the way through. So we really have this very important spot down here in this 96.5, 96.60 area right here for both the buyers and the sellers, right? Again, will they break out and keep going? In that case, we get a breakout setup going higher here, or do we pull back? As we pull back, buyers want to buy underneath this trading range because, of course, ranges are magnets. We got a channel coming in off of that low. Or as they rotate off that high, does this thing begin to fully reverse, right? And we end up taking out, there's that prior week low. 95 is a big round number. And so we definitely have that as a big clue. Probably the biggest clue that we have right now. Second big clue here, we have major resistance above. Okay, this area at 99 is really a major top. Now, that is important, right? Because we can also do here now is look for some of those double top reversals, right? So if we do end up going up, getting that double top reversal, that'll be an option. At the same time, too, I got to be careful buying up here. Right? I can't be looking for little pullbacks up here, right? I've got to get some strength breaking through that 99, really to give myself some wide open space until we really get up to that 100, 183, and really the market really wants to go to that 101. 101 is kind of where the market really wants to go to, the buyers at least here, if they have their way. 100, of course, is just a big psychological level there for oil traders. So we know we have major resistance above us. Third clue, and a very important clue for us, is the major range below. The day began in a range, right? But this is a very short-term range here. If you look back in time, we've got this monster range here right below us. So why is that important? Well, a range is a magnet, and we are at major areas of resistance with a range with a range below us. These are the situations where reversals happen all the time, right? So we definitely have potential this market may get dragged back down into that trading range. The buyers have control right now. There's no doubt about that. Buyers definitely have it. Will they keep it? That's the question here for tomorrow. So knowing that, how do we buy it? How do we sell it? How do we make some money on this thing here for tomorrow? Well, again, I'm going to be using one of my breakout patterns going higher. Right? We talked about 3 breakout patterns, covered 2 of them already. We'll talk about those here in a second. Buyers will love to buy the breakout. Sellers, right? Bears could look for that double top reversal off the high. Buyers would also like to buy that pullback below that trading range, right? Or the sellers can take this thing and run this thing back down that prior week close. So let's talk about now as we go higher. Okay, if we go higher here, let me get rid of that channel here for a second. If we go higher here right now, this is exactly where a 1, 2, 3 breakout pattern can come in. I want to see buyers come in and jump off of that moving average. If they can, I'll then draw a trend line off that high. We now can assume we've broken through this major area of resistance. I can mark off that channel off that low. And again, repeat after me, traps, baby. First test is the best test. That trap is always one of my favorites. Again, most important thing is get underneath that moving average, because that's where traps are, where failures are. That's what the money is, right? The money is made when you're kind of fooling the other side of the market, and there's no more consistent place to do that than on the other side of that 21 moving average. So we're definitely looking for that 1, 2, 3 breakout as we go higher here. The other one, of course, would be a pop and a grind. Right, a pop and a grind would definitely be would be probably the easiest one, right? So we pop up already, and now if we begin to grind higher here, right, grinding higher here, easy. Draw that trend line, find that right? Find that channel and of course grab that, right? Grab that first pullback off of that low. I also think a third breakout pattern, which we haven't talked about yet, which could also apply to the S&P and the Nasdaq, will be a 2-try breakout. So now let's say, for example, we see an opening, right? Market opens up, we jump up and run higher here, 2-try breakout, strong move, shallow pullback to the moving average, higher high in price, traps, baby. This is called a 2-try trap or a 2-try breakout in this situation. Again, this one will need to convincingly break above the 99. 99 again is a major area of resistance. If I can see a convincing, strong break through it, that shallow pullback, and again, that higher high in price, that will confirm that traps it up. If I can find a channel, right, off some of these highs, even better, but it's not required. Okay, now remember, we haven't talked about that one yet. That can also apply to the Nasdaq. That can also apply to the S&P as well. So I'll give you a little bit of incentive to keep on watching these videos all the way to the end to get all the full the full strategy here as we finish things up here tonight. So we've got that covered now as we go higher. And then again, we know that if this market pulls back and then we start getting that major turning point, signs of exhaustion, catalyst by selling the stops, hit those stops with that 2-try failure, 2-try reversal, and then mark up that new trend off that low, find that channel high, and bam, sell that high, right? Again, where does that market want to go, right? It wants to go down and take out some of these lows. So grab the failure off the high, and then grab that first test off that new channel, put some targets down at those retests of those lows, and you'll be good to go from there. Easy way to sell it. Again, not a big fan of picking a top, but if I can see that double top, get some signs of exhaustion, that definitely is something I'm interested in here for tomorrow as well. Now, as we go lower, the amount above the range is oftentimes the amount below the range. We talked about this last night on the video, and it was one of the biggest reasons why we anticipated that short squeeze here in today's markets. So as we pull back right now, it's overall bullish still. We have this big channel coming down, right? So we've got a lot of reasons to like the buy side down here. One reason we do not like the buy side, though, is the range below us. The second reason would be the momentum as it turns. So think of that same setup, right? Rope in those bears. Get those bears to take the bait down here. Remember, sellers want to sell high, higher highs on that. And then again, once those bears commit, all their stops, think of where their pain points are right now and buy into those stop losses, right? Stop run. Then where's the market want to go? It wants to go back up and take out that high. So mark off that high, mark off that low, drill down to your entry time frame and grab that first test, right? Same idea here as that deep pullback that we saw on the Nasdaq or on the S&P. Okay? Now, what if we pull back though and the market jumps? Right? So now we pull back to support. Again, think of that channel coming in here off that low here again. Now we pull back into support. But now what happens is now the bears come in and they pull back and they jump off that moving average. Okay? Now what do? Yeah, we're not going to fight that. Once the bears jump off the EMA, now the bears have control. Mark that low, mark that high. First test is the best test off that trap, off that failure, off that pullback combo. Okay, or a very, very common kind of slingshot reversal here is, let's say we do pop here and we begin to grind. That's very common with these little slingshot reversals like this, because again, what happens is the buyers look at it and they go, I'm not touching that thing, right? It's way too strong. I'm not going to buy into that. And when the buyers on the side of it walk away, it starts to chop, right, and chop down. That grind is a very easy giveaway because now we can go out, find those prior swings. On these ones, the pop and grinds, it's almost always a trap, right, or at least a relatively deep pullback off the top of that hidden channel as we go. We know where the market wants to go at that point, right? 95 is a very easy objective. It's right around the prior week close. It's a big round number. It's a multiple of 5, right? 95, 100, 105. Oil loves these $5 moves here right now. So pretty good game plan there on the black gold, the Texas T here for tomorrow. Looking forward to see what we get here though, ahead of earnings on Friday. Will we break out back to 100? Will we pull back and blast again? Will we pull back and fail and run lower? All we need now is a few more hours, get a few more candlesticks, and we start making sense of it here going into Thursday's trading session. And speaking of Thursday, the game plan's ready for us. Now all we got to do is go out and trade it tomorrow morning. And there's no place better to do it than in our trade room, 8 o'clock Eastern time. We open things up tomorrow morning. I'll put all the free classes, all the membership courses, everything you need will be in the description of the YouTube video. All the chart time frames I'm using tonight, all the info will be there in the description. Don't be afraid to call the office. I know I cover a lot on these videos, so if you want to slow it down, make sure we have all the pieces put together the right way. Don't be afraid to call the office. We have live chat on the website as well, so don't be shy of using the live chat as well. And as always, if you have any questions, you can always drop questions in the comment section below. And I hope by now you guys enjoyed the video. Hope you hit the like button for me tonight. Hope you guys subscribe to the channel so you don't miss tomorrow night's video. And boy, oh boy, looking forward to a great day tomorrow with you guys in our morning trade room, 8 o'clock Eastern time. I will see you there as a student. If not, you better come back tomorrow night. We'll do it again. Get ready for finally Friday, last day of the week, last day of the month. We'll cover in tomorrow night's video. All right, guys, that's it for me now. Get some rest. Busy day tomorrow. Excited to see you guys there. If not, we'll see you guys back here same time, same place tomorrow night. My name is Joseph. Be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.